Are we on? Hello? Perfect. Hello, everyone. Thanks so much for coming along this afternoon and for giving up some of your time to talk about the cost of living crisis, which is top of everyone's minds, I'm sure. My name is Rachel Statham. I'm Associate Director for Work and Welfare Estate at IPPR. I'm really delighted to be welcoming you all to such a lovely space this afternoon. I'm joined by a fantastic panel to be discussing what's a really pertinent policy challenge. We'll be talking about the rising cost of living.
Excuse me. I'm coming down with a conference cold. I do beg your pardon.
Not you.
Yeah, sorry. Sorry. Conference cold, really sorry. Sorry.
Not at all, bless you. The cost of living is obviously rising across the board, but not everybody is affected equally. People living on low incomes are regularly charged more for essential goods and services. We can see that really acutely now in the context of the energy crisis and prepayment meters. We also see it clearly in mobile data prepayment and in insurance premiums, which we'll be digging into today, where we see that prices are hiked up due to the postcodes people live in and due to pre-existing health issues. With prices rising across the board, we know that the essentials are mattering even more. They're taking up a greater and greater proportion of people's household budgets. And we know that the winter ahead is looking all the more challenging by the day at the moment. Particularly glad that you're taking the time out of your day during what seems to be a kind of minute by minute changing picture as our current economic challenges deepen. I think in our last event, we were saying that if the pound hit parity with the dollar during our conversation, somebody should shout. But there's definitely a lot of live economic crises to be responding to. But I'm really pleased we've got some time this afternoon to focus on what this means for low-income households in particular, and what policymakers can and should be doing to respond to the deepening crises that people are facing day by day. So without further ado, I'll introduce you to our panel of speakers who will have the chance to make some opening remarks, and then we'll have a kind of question and answer, and you'll have a chance to ask your own questions as well. So do keep them in mind as we go through our discussion this afternoon. To my right, we've got Jonathan Ashworth, MP, Shadow Secretary of State for Work and Pensions. To my left, Martin Kopak, who's Director of Fair by Design, who work to challenge poverty premiums. We don't have Lalitha Trai, who you might have seen on your agendas, because she's unfortunately unwell today, so she sends her apologies. We do have Samir Kashani from the Institute and Faculty of Actuaries, who are our sponsor today that we're very grateful to. And we also have Emma Hardy, MP, as well, who's a member of the Treasury Select Committee. So really delighted to be joined by such a kind of broad range of expertise this afternoon. So I'll go in that order through our speakers to let them have a chance to make some opening remarks to you, and then we'll open up to some questions. So I'll hand over to you, Jonathan.
Oh, right. Okay, well, thank you very much, and pleasure to be here at the IPPR, and I want to thank the IPPR again for all the support and help that you give me with your very good research, policy suggestions, and ongoing insights. I just want to make a couple of two or three very, very brief comments, because you've got an excellent panel here. First of all, the poverty and the inequality that we see in society, which will only worsen, I believe, after Friday's most divisive, unfair, unjust budget, probably in living memory, holds our economy back. You cannot grow the economy sustainably unless all share in it. And you cannot get that sustainable growth with the inequality and the poverty that we see in our society. So tackling poverty and inequality, whether that's child poverty, and I've spoken at the conference today, and where I've said that tackling and defeating child poverty is the obligation this generation owes to the next, has to be a priority. Pensioner poverty we have to tackle. I mean, for 70 years of the welfare state, one of the big questions was, how do we decouple the link between old age and poverty? Actually, we did a lot of that when we had a Labour government, but now pensioner poverty is on the increase as well. And we also know that today that the old deal that we all grew up with and expected, that if you're in work and employment, you'll be lifted out of poverty, has completely broken down with so many in work and in poverty. So we have to tackle child poverty, pensioner poverty, and in work poverty, and we will not grow our economy sustainably unless we tackle those three scourges of poverty. And we want to grow our economy sustainably, because that's the way in which you can raise living standards sustainably, and you can redistribute the proceeds of that growth to public expenditure. The second thing is that poverty makes you poorer. Yeah? The circumstances in which you find yourself when you're in poverty mean that the basics in life are often more expensive for you, whether that's because of the nature of the prepayment meters you use, or whether it's as simple as it was when I was growing up, that you cannot afford a car, the bus service may not stop at your estate anymore, and even if it does stop on your estate, getting the bus, the out-of-town Asda, where you have to carry back 4 or 5 shopping bags, is not incredibly convenient for you, particularly perhaps if you're elderly or if you're disabled. So you're forced to go to the Spar shop or the cost cutter shop or whatever it is on your estate. But when you go to those shops, price of pasta will be more expensive than the price of pasta in the Asda. A dozen eggs will be more expensive, or half a dozen eggs. Milk will be more expensive. You know, you get the point I'm making. Poverty makes you poorer. So when we talk about poverty, yes, it is about whether the welfare system provides people with a level of dignity and basic standards, which I very strongly, basic minimum of incomes and so on, which I very strongly believe it should give people those basic dignities. It's also about, poverty is also about your ability to take part in society more generally. It is also about the, as was written in the ragged-trousered philanthropist all those years ago, it's all about access to the other comforts and enjoyments of life. Final point I want to make very briefly is that I do think, and this is perhaps the more party political point, but hey, you are at a party political conference, is that I do think this week you're seeing the Labour Party putting together an exciting programme. It's not the whole programme, because a general election may not come until 2024, but you are seeing a serious programme from the Labour Party in terms of taking advantage of future jobs and technologies, the green heat of future technologies, if you like, to paraphrase a previous Labour leader, where we've just seen Rachel Reeves announce significant investment in training opportunities for our National Health Service. I've talked about the need to fundamentally reform our employment services to create a more universal employment service to help more people into work, so we don't have ones whose priority appears to be policing those on benefits and cutting their benefits, but is actually giving people the tailored training, skills and support that they need. And there'll be more announcements throughout the week. So I do believe that we are putting together a set of policies which will lift people out of poverty, will target these inequalities, and will grow our economy sustainably. And my final point, I know I said that was my final point. My final point is this. I think significantly, the levels of inequality that we are seeing, we do not think are acceptable. They should not be etched into the landscape of our nation. We've just seen a Shadow Chancellor today announce that, criticise that unequal budget on Friday, and announce that she'll bring that higher rate of tax back in. Because tackling poverty and inequality is not just a problem of poverty, as Tawny said, it's also a problem of riches. So we need a fairer tax system to ensure that the poorer and less well-off are treated fairly and with justice as well.
Thank you very much. I'll turn next to Martin.
Thank you very much. Just a few words about Fair by Design. Not everybody may have heard of us. We exist to eliminate the poverty premium. That's the extra costs that poorer people pay for essential services. So we've had a few examples already. We tend to operate in the markets such as energy, insurance, credit, and payment systems. And we differentiate ourselves from the wider poverty movement because there's so many other organisations better placed than we are. We do not touch the sort of income maximisation debate. What we concentrate on is how people are penalised for being poor by the market. So at Fair by Design, we work to tackle a belief in competition meeting all needs, where choice exists for everybody, not true. A disconnect between policymakers, policy wonks like myself, and regulators with people's lived experience of poverty. They're not always at the table to come up with the best solutions, and we work to change that, but also a lack of ownership of poverty and exclusion issues that exists between regulators and government, this big chasm. I've been working in consumer advocacy for over 20 years now, and the hardest thing to get either regulators or government to look at when it comes to poorer people, poorer households, poorer consumers, is income level. It doesn't compute. Nobody wants to touch the fact that we're asking amoral markets to make moral decisions. Market, you decide who gets this product and you decide what they pay for it. But when it comes to essentials, those things we all need in life, that can't be happening. What happens, and I think we need to mention here in terms of governments of all colours over the years have said to people, look after yourselves, protect yourselves, save for a rainy day, take more responsibility for yourself. Take insurance products out to look after your family in the future. But what if the market doesn't want you? You've been a good citizen, you've been a good consumer, you've tried to do the best, but the market says, I can't make enough profit out of you, so I'm going to charge you more. You're at a higher risk, you're more costly to serve. Who steps in at those instances? And that's what we are trying to tackle at Fair by Design. Ultimately, there's big questions here, which only by government, a future government, working with the regulators can solve. And it's often around cross-subsidisation between richer consumers, poorer consumers. That can be done by tax. It can also be done by industry being, or the regulator being directed to look at these different things. So, for example, Ofgem could get rid of the prepayment meter cost for energy. Now, we've got an interactive map, and it's really, really cool, but I would say that, but I know MPs really like it. And what we've done is measured the poverty premium to a constituency level.
Oh, right.
And you can go on our website, Fair by Design. It will detail all the different poverty premiums in your constituency, and it'll also say how much would go back into your constituency, linking to research that the poorer you are, the more you spend in your local community. So if we're talking about levelling up, although that seems to have gone out of fashion, I think, quite recently. If we're talking about levelling up, if we're talking about cost of living, we can put money back into people's pockets. Just a few headlines in terms of what we found. This research was done with the Bristol University, and 1 in 8 households experience at least one type of poverty premium. The cost of the poverty premium to a typical parliamentary constituency is 4.5 million. This equates to over £430 per year per low-income household, equivalent to nearly 10 weeks grocery shopping. And that's as an average. You're talking about 700 odd for people who pay in higher ones. Also, and we did our little bit of homework here before we came today, bearing in mind the audience, marginal seats gained by the Conservatives have higher levels of poverty premium. So this includes Stoke-on-Trent, Great Grimsby, Kensington, Wolverhampton, North East. Marginal seats held by Labour with high levels of the poverty premium include Nottingham North, Normanton, Pontefract and Castleford, and Birmingham Erdington. There's a political necessity here for a future government to take hold of this. So do take a look at our website. There's plenty more facts and figures there, but there's also stories there. I think it's when you hear the stories of people challenged with this injustice that it really gets you going. Thank you.
Thank you very much. Thank you, Martin, and we'll turn next to Samir.
Good afternoon, everyone. Thank you for coming, and thank you for inviting me onto the panel. My name is Samir Kashani, and I'm a fellow at the Institute and Faculty of Actuaries. I'm representing that body today because we have a keen interest in this report and this area of work in particular. For those of you that don't know, the Institute and Faculty of Actuaries is a self-regulated body which is responsible for overseeing actuarial work in the UK, but we also provide support to actuaries abroad. An important part of the work that we do is governed by our Royal Charter, which is to serve and act in the public interest, which is why this is particularly important to us. And I'll do my best today to provide you with some insight and experience, perhaps from the industry, and give you some words to perhaps help move this debate along. Thanks.
Excellent. Thanks very much, Samir. I'll do one of the
Yeah,
and then finally, Emma.
Thanks very much. And I'm so pleased lots of people are here, because when you start talking about poverty premium in the markets, I wasn't sure we'd get lots of people in the room. So thank you all for coming. I think if we were able to say that we have a way of saving constituencies millions of pounds and it's not going to cost government anything, I'm hoping it's something Rachel, our Shadow Chancellor, and the Shadow team will jump up and down and say this is amazing. Martin's done so much work on the poverty premium and what it actually means. I know in my constituency of Hull West and Hesel, it means nearly £6 million. £6 million is what people are paying more to deal with the poverty premium. And to explain a little bit more about what this means and in terms of the market, the people that nobody wants, it's down to your car insurance. You pay more for car insurance, not based on your ability as a driver, but based on the postcode in which you live. You pay more for your life insurance, not based on how healthy you are as an individual, but again, based on the postcode where you live. And the same reasons why you pay more for credit. If you're paid irregular amounts each month and therefore you can't pay by direct debit, you pay more. We already understand the prepayment meter. If you can't pay monthly, you pay more. If you can't pay your insurance off as your yearly insurance in one instalment and you have to pay it monthly, you pay more. It costs an awful lot to be poor, and it's unfair because it's saying to somebody that because of where you live, you should pay more than somebody else should because of where they live, but for no other reason. They could be a much more dangerous driver than yourself, but you get charged more for it. And this £6 million that's taken out of Hull West and Hesel is £6 million that could be going back into the local economy and supporting there, and that money being recycled in the area. Fair by Design have worked out it's 2.8 billion a year that people are charged more for being poor in this country. And what happens with this issue is everybody gets together, nods their head and says, oh, this is incredibly important, this is terribly important, yes, we should do something about it. And the Treasury say, oh, no, we shouldn't do something about it, this is social policy, it's not for us, it's a DWP. DWP say, well, actually, this is to do more of insurance than markets, this isn't really for us, this is more to do with the FCA. And the FCA say, I'm sorry, we don't get involved in these things at all, you need to go back to the Treasury. And it goes round and it goes round and it goes round, and nobody takes ownership of this issue, and nobody says, let's look at it holistically, let's get everybody together and let's come up with a solution. Now, the government came up with a financial inclusion board, but let's be honest, it's a talking shop. It hasn't actually done much. We've seen some basic changes. We've had the introduction of the basic bank accounts. But what about car insurance? Car insurance is the only insurance that everybody must have. You've got to have car insurance to drive a car. What if you can't afford it? Or what if because of where you live, your car insurance is more than the value of your car? And therefore, what do? Do you take a risk and drive without insurance? Or what, you don't have a car and therefore you can't access so many different jobs, and if you live in rural areas, that has a greater impact on you. You can see how unfair this actually is. So one thing, it sounds super dull, but Martin and I have been working together on it, and hopefully you'll get as excited as we are, about making the Financial Conduct Authority have something called a have regards for financial inclusion. It's not saying the Financial Conduct Authority has to solve the problem of financial inclusion, but it says you've got to look at this and you've got to take some responsibility of it and you've got to analyse this. Now, we got this passed as a recommendation in the Treasury Select Committee, but at the moment in Parliament there's the Financial Conduct and Markets Bill, and we're looking at putting amendments through to that to change this, to make people start to look at this issue and take it seriously. Another thing that we're really interested in is this idea around a social tariff. Many of you have probably heard there's a social tariff for broadband, so you only pay a certain amount. Why not a social tariff for energy, to make sure that everybody has affordable energy as well? And just to think about the future and the future risks coming up, and I'm amazed the government haven't actually done anything more about the poverty premium, because they really need a good news story when it comes to the economy at the moment. But anyway, when you're looking at the future, they've come up with this idea of investment zones, haven't they? And they say in these investment zones, we're going to cut red tape, we're going to make building more easy, we're going to get rid of planning regulation, it's going to be so simple to put these, whatever it might be there. So, okay, let's think about this then. So if we're going to get rid of building regulation, we're going to change planning systems, we're going to put new homes in these areas where they weren't previously built, are they going to be of the same standard? If they're not conforming to the same regulations that other properties are, and if they're not of the same standard, what's the market going to do in response to offering insurance for these properties or offering mortgages for these properties? And who's going to end up living in these potentially substandard properties that you can't get a mortgage for and you can't get proper insurance for as well. So I think that's a red flag in the distance that we need to be having a look at. When the government start talking about cutting regulation, what happens to the standard of these properties? Who do we think is going to end up living in them? And how affordable is it going to be for them to continue to live in these properties? And that's just something I think we need to have an eye on as well. But I think that's pretty much, I'll stop now. Yeah.
Thanks very much, Emma.
Thank you.
So hopefully that's an excellent introduction to what the poverty premium is and how it might translate into kind of longer term challenges as well as the acute challenges that households are likely to be facing in the months ahead. So to dive a bit more into the current context, I wanted to first ask what decision makers can do to avoid a deepening crisis for people on low incomes this winter, and how does tackling the poverty premium have a part to play in that picture? I thought I'd start with you, Martin. Put you on the spot.
So we've got a number of recommendations in our latest report, which looks at the poverty premium at a local level as well as a national level. They are aimed at both government and also at regulators. So in terms of government, we have been vocal supporters and launched back in June a briefing on the need for a social tariff in energy. If not now, then when? Yes, it's perhaps a more of a medium, long-term approach, but if we don't look at the price that people are paying at energy now, I really don't know when. Do check that out. Belgium does this, and we've got an article, I think, is it out already, Frankie, in the New Statesman? Coming out today, which is a comparison with the Belgian market using a social tariff. And this is around people not opting into a social tariff, but actually using government data to find out who should automatically get a social tariff that is affordable. Also, we're calling for the FCA to have a cross-cutting, it's not done at all, Emma. And I loved being, grilled by you at the Treasury Select Committee. But also, this again sounds, we're about systemic change here at Fair by Design. We are calling for the systemic issues to be tackled. So what we would really like the next government to do is to make sure that every government department has a responsibility and a transparent process for dealing with low incomes and essential services with their regulator. No longer do we need to keep going to the Treasury to go to the FCA, to go to Ofgem, to come back again, go to the Competition Markets Authority. You get the picture. We just need a transparent process to say, if the market is charging people more because they're poor, there needs to be a mechanism for addressing this.
Thank you very much. Jonathan, would you like to come in?
Well, just a couple of points. I mean, obviously the Labour Party over the summer announced our plans for a freeze in energy bills. And remember, we would have been freezing energy bills at a lower price than what the government are now freezing energy bills. I mean, the government have presented their plan as if everyone's going to have a big freeze, but people are going to see in their inboxes next week, or if they still get their bills through the post, an increase in their energy. And we also announced a plan for those on prepayment meters as well, which I thought was very, very important, which would have benefited around 4 million households. So there is immediate action that we need to take. I mean, I totally agree with the points that have been made about how this has to be cross-departmental, cross-government and cross-government agency. And if it is the DWP who is at fault for some of this, then I'd be very happy and keen to take that up as an issue, both as in the shadow role, but also if I should ever be fortunate enough to be the country's working pensions. Working pensions. When? Secretary. Well, by the power of your contribution, it might be you who is the Working Pension Secretary, Emma. The other thing I think we have to think about is the adequacy of the welfare payments that people are currently living off. Now, there's no shadow Treasury Minister here to watch what I'm saying in terms of public expenditure. But in all seriousness, they raised benefits and the pensions by, 3% this April, when inflation has been running at 10% and could be higher. That meant that if you were on universal credit, which had already been cut by £20 a week, it was probably, depending on the nature of your payment, but it could have been around, on top of the £20 cut a week, another real terms cut of £25 a week. I mean, the cut in the basic state pension, because they broke their commitment on the triple lock, works out, I mean, depending on, what level of inflation you pick, but, you're talking about a £500 real terms cut in the value of the basic state pension this last year. And the reason why the benefits and the pension went up by 3% in April and not the higher levels, 10% or whatever, is because they make a decision on uprating in the autumn. And they apply the autumn's uprating to what it is in April, and they say they can't do anything about that. Well, Barbara Castle, in 1975, did 2 upratings because at the time of that inflation crisis in a year. And that was when these things were calculated based in offices using pen and paper, or pencil and paper. For them, they've literally sent millions and millions and millions on a universal credit system, yet they say they couldn't bring forward any upratings to better reflect current levels of inflation. Now, the question will be, by what level are they going to uprate benefits and the pension next year? Because at the moment, inflation is running at 10%. So are they going to endorse a 10% increase next year, or are they going to break their promises on the triple lock for the pensions and break their promises for some of the poorest again? We don't know. There was no indication in the budget on Friday. You would have thought that would have been an appropriate moment to announce that benefits and the pension will go up by 10% next year. And we've got to take this into account. Based on what we are seeing today with the economy and the pound and what they have done because of the levels of borrowing for big multi-billion-pound tax cuts, right? We could be in a situation where interest rates go up quite steeply relative to where they are or what we've been used to in recent times. That's going to have a huge impact, obviously on those who have mortgages themselves, but it's going to have huge repercussions for those in the private rented sector who, as we know, in our sort of economy that has been built on speculation these last few years, that a lot of people have made money by buying houses and renting them out, often to poorer people who totally rely for a proportion of their rent to be paid by housing benefit. Well, mortgage rates and interest rates going up because the government have failed to get inflation under control and have stoked the crisis by billions of pounds of borrowing for tax cuts. This could have very serious repercussions for those who either have a mortgage or for those who are already facing pretty unaffordable rents at the moment. So, sorry to be Mr. Gloomy there, but we could be heading into a very, very serious moment on top of what has already been a horrendous crisis for a lot of people in our communities.
Thank you, Jonathan. I'll go to you, Emma, and then Samir, perhaps you could give us some examples of what this is looking like from your perspective from the insurance industry as well.
Yeah, and just to echo what John said, I think what we announced in the Labour Party on the prepayment meters is a really good way of looking at tackling this. But I think this is one of those things that the financial markets and the financial services don't really want to look at tackling poverty premium because, let's be honest, it's a profit-making organisation, it's a market, and actually to address some of this will cost them money, and I think we need to be honest about that. But we have the model from Flood Re, which I'm going to make the assumption most of you understand, which is to make sure that everyone's able to get flood insurance. So we already have a model out there, and what I'd really be keen for the market to look at, and under a Labour government, to be bringing together that cross-departmental work that John talked about, to look at what we can do to address issues like car insurance and contents insurance. I mean, just to give you one example from my constituency, during the summer when it was really, really hot, there was a fire in Hessel, which is one of the areas in my constituency. It came along and it burnt down loads of people's gardens. Luckily, didn't set fire to the houses, but it melted their drain pipes. It melted their sort of, various pipes on the outside, caused damage to windows and doors, and the usual stuff that's out in the back garden, the kids' toys, the bushes, the fences, and all this sort of stuff. But no lives were lost, so it was, you might say, well, this is fine. I was walking past the other day and I was talking to the guy because he was in the garden fixing his fence. And I said, oh, did you manage to get your money back on your insurance? And he said, oh, I didn't have insurance, Emma. And I was like, oh, right. And he says, no, he says, I've never bothered because, you know, they charge you a fortune. He said, so I've just had to pay for it all myself. And he'd had to pay for his new guttering, his new drain pipes, his new equipment in his back garden. He says, but this, he said, this is why I'm doing this. And he was sort of laughing because he was fixing his own fence. He said, because I've got no one else, got no one to pay to do it. And you think, well, these are the people who have the least. And then when disaster strikes, end up paying the most because he hadn't even thought about having contents insurance. Because once you're thinking about whether or not you're going to have a meal a day, whether or not you're going to heat your house, you're not then thinking on the same level, I really need contents insurance. And then disaster happens and these people get harmed the most. In the previous meeting we were at with my friend Siobhan from the Treasury Select Committee, she was talking about gas mains that went off and blew up and in her constituency and actually destroyed lots of homes. They didn't have buildings insurance, some of those people. Didn't have any buildings insurance and their homes have just been destroyed by a gas leak and a gas explosion. I mean, this is where, you know, I'm not here at advertising insurance products, I promise. But what I am saying is that it should be a basic right for everybody to be able to access the same products that everybody else has. And if the market's not providing it, then we need to think of a different way. We had basic bank accounts when we're forced on banks when the market wouldn't provide bank accounts for people they deemed to be too risky. So let's just explore the idea. I'd love to see under a Labour government working together, exploring the ideas of what sort of basic sort of insurance products or accounts or financial services can we offer people who couldn't necessarily access the same, some of the other ones. And they're the kind of things I think that we could look at. And part of this has to be an increased role for credit unions as well and mutuals.
Thank you. Samir, what's this looking like from the industry perspective?
Yeah, I guess there is anecdotal evidence, I suppose, although it is relatively early days, that people on lower incomes will start to forego, you know, more and more of the essentials. And one of the first things that they will probably stop buying, if they were buying it at all, would be insurance. So I think that's quite a worrying thing in some regards. I know nobody likes to buy insurance. It's not something that you kind of look forward to renewing your policy or premium every year and are happy to spend the money. But I think there are sort of two aspects to that. There's the education piece, and I don't want to kind of bleat on about how good insurance is and how everybody needs it. But, you know, at the end of the day, if any of us have got a member of our family and they're hit by a car, you know, you would want them to be taken care of, you know, financial bills and everything. So, you know, you'd be massively disappointed and upset if the driver, you know, hitting the person that you care about didn't have insurance and there was no way to help that. And some of the examples that you gave about people's homes. So I think there's an education piece to say, okay, you know, insurance can be a good thing. The principle underlying insurance, I don't want to kind of bore or preach to you, but basically it's about cross-subsidy. So, you know, if you take society as a whole, everybody pays an insurance premium, and yes, there'll be winners and losers in that, but overall, the cost of claims should equal, more or less, the cost of premiums. But there's no such thing as a perfect market, as we know, and there'll be companies that take increased profits, and there'll be people that can't afford that. So it doesn't quite work. No market works perfectly, as we know. So there is, you know, a degree of government intervention required. We can debate, you know, depending on where you sit in the spectrum as to how much intervention is required. But clearly, it's not working for all people. And you know, as we are heading into more difficult economic times, I think those people who are least able to afford insurance and perhaps least understand the benefits of it are going to be those that suffer the most. And I think that's something that needs careful consideration.
Thank you. And next, and this is my last question before we open up to the audience, so if you've got a question in mind, start formulating it now. What is the role, do you think, of suppliers on one side, we talked about a little bit, but also about government policy, regulators on the other, in tackling the poverty premium over the longer term? Emma, I'll go to you first.
Okay, so we've mentioned, of course, the FCA having the have regards for financial inclusion to be able to look at what's going on across the whole of the sector, and the idea of the book stopping with them so you don't end up on the merry-go-round chasing around saying which department's actually responsible for this. So I think that's a role that government could actually play by passing the regulation to make the FCA sort of, you know, to look at this. And you have to remember it was a Labour government introduced Flood Re after we had the floods back in 2007. And, you know, that was done under a Labour government. It's been a fantastic initiative that's made such a huge difference for the area I represent, Hull, which is obviously prone to flooding. So again, there's another, you know, something like that. I mean, I think at the moment, we as in the Labour Party, certainly not myself, need to come up with a definitive answer. But I think we need more than a talking shop, which is what we have at the moment with the Financial Inclusion Board that the government's put together. We need something with teeth and something with powers and something that's taken seriously by the different departments and organisations involved to come up with the best solution for tackling this. And that has to come from leadership, and it has to come from the government at the top saying this is a serious issue. You know, this matters. The poverty premium matters. It's charging people for being poor. We've all given lots of powerful examples, and I'm sure all of you have got those as well. And it's the government's role to say this is important, get people together. And as you can see, I've been one of the people in the event for just before previously about saying, you know, making this a priority to kind of tackle some of these, looking at insurance, looking at bank accounts, looking at all the different aspects of financial services. And I'd like to see a social energy tariff part of that mix.
Excellent. I'll go next to Martin, who has to leave us shortly, so it'll be a final word from Martin.
Sure. First of all, I wanted to give credit where credit's due. The DWP have been amazing when it comes to the poverty premium. They understand, actually, there's an opportunity here to put money into people's pockets. You know, up to, for some people, it's about £700 to put into people's back pockets. So they've had me run workshops across departments and, you know, 2-hour workshops, trying to get the Bays, Treasury, everybody on the same page. But unfortunately, as soon as they leave the room, they really value their autonomy. So they're not necessarily going to work together on this. So credit where credit's due for that. And great that DWP see this as a really easy win, because it's not going to cost the Treasury anything. It's about cross-subsidy within consumers. Some other hard examples here. Regulators are often very wary to do something without sort of regulatory cover. I'm an ex-regulator. A reformed regulator, even, you could say. A bit like with the payday lending, the FCA didn't want to act on that, or the FSA at the time didn't want to act on that until they had cover from the government. So can we have cover from the government for the FCA to investigate how well the insurance market's working? Until we know under the bonnet what's happening, we can't then decide whether it's social policy, regulatory policy. Also for the FCA to stop non-standard billing payments. So basically, if you don't pay by direct debit, you get charged more. Can we get rid of that payment?
Yeah.
Because if you're on a 0-hour contract, direct debits are a danger to your financial health. Because if something goes out, you then get penalised and charged for that. Get the Ofgem to stop energy companies charging more for not paying by direct debit, including prepayment meters, as well as the introduction of a social tariff. Look at our briefing on the website. We were calling for it before it was really cool to call for it. So do take a look. Also, get the payment systems regulator to ensure that there's more technological innovation here. So, for example, again, if you want to pay your energy bill and you can't use direct debit, there's something out there. There's these systems called request to pay. And what that means is you can decide, you can still have a direct debit, but by this system you get a push payment. You decide how much you release from your account at that point in the month and spread it to match your income. These things are out there, but they're not going to come into the market by themselves, because let's face it, poorer people are generally not that profitable, and we just need to recognise that and address it. Thank you.
Thank you very much. And thanks, Martin, for joining us.
Thank you.
I'll go next to Jonathan.
Yeah, well, I mean, I'm obviously pleased to hear that DWP is interested in this, and so that means that when we get take over and are running the DWP, we should have something to build on. We'll just have to get our colleagues in other departments as well to engage with this if that's one of the problems. I don't really have much to add other than to make a broader point. Is that, you know, we do believe, and we would use the might as a government, that where we see market failures, it's right that we step in and intervene. I mean, intervention in the economy, you know, it's become more fashionable now, I suppose. But we did have a long period in recent British economic times where intervention was seen as absolutely, you know, don't go anywhere near it. Well, that has changed, and we do think there is a role for intervention, which is why we've announced, for example, the energy price cap policy, and we've seen the government catch up with us. I think there is another issue here, just thinking about all the stuff around credit ratings and so on that's been raised, is that we are looking at how we overhaul, reform, and essentially replace the current Tory universal credit system and replace it with a system that treats people with dignity. There are lots of problems with the universal credit system. I mean, the most obvious problems are the ones around adequacy of the payment and the way in which entitlements to it operate. And I'm thinking specifically there with the way in which it, to my mind, punishes children just simply if they are unfortunate enough to be the third child in a family, for example. But there is also an issue around the design of the system and the way in which payments are made. You are paid once a month because it assumes that everybody is paid like that, where if you're in work, whereas people in work, if they're on 0 hours contracts or perhaps are paid every 4 weeks, but it's subtly different from being paid monthly. These might not seem a big thing to, unless you're engaged in it, but these can have very significant consequences for the amount of your universal credit award, because of the way in which universal credit month by month is calculated. And the reason why that is significant is that you can suddenly find yourself with no award or a much reduced award, and therefore getting into debt and not being able to pay your bills, which in turn impacts on things like credit ratings and so on. And before you know it, you are locked in a spiral. Similar to this for those who are out of work, but on universal credit. You're asked to apply for so many jobs every year on the Universal Credit or the Job Centre Plus website. So you've got to use your data on your phone. If you run out of data that month, you can't apply for the jobs. You can't apply for the jobs. You get your benefit sanctioned. And so before you know it, you're in debt again. Again, impacting your credit rating. You may want to get out of that expensive privately rented house that you're in, which your housing benefit does not remotely cover. You're desperate to get out of it, but because of what you are trapped in this cycle, there is no chance whatever that you'd be able to get some finance in place to actually move out of that privately rented home and perhaps get yourself in a scheme where perhaps you could even hopefully begin to own a home. Again, because of the way in which universal credit is impacting on your ability to borrow and credit ratings. And so on. So as we reform and overhaul universal credit, we really have to look at the way in which it imposes impossible debts on people, which in turn impacts them in these other ways.
Absolutely. And that lack of reliability in universal credit is a theme that comes up in our research again and again. There's a question at the back there, and then one at the front on this side, and then I'll go to this side next. So somebody at the back with a pencil.
Thank you very much. It's not often I agree with everything I've heard in a meeting, but I think I have so far today. I'm Joanna Elson. I run a charity called the Money Advice Trust. We work closely with Martin and his charity. I wanted to say something very briefly about the human cost of all of this, and then to lob an idea in for people to kick around. So the human cost, 3 statistics, if I may, from something we published last week called Impossible Choices. So that was interviewing via Opinium 2,000 people across the UK. So 3 really shocking statistics, I think. The first is that in August, 8%, over 4 million people used high-cost credit to pay for their food. The second is that, 11%, 5 million people, said they'd gone without heating, electricity or water in the last 3 months. And the final one is that 29%, 15 million people, told the interviewers that they worry about money every day. And I don't think I need to tell the people in this audience that, for one of the richest countries in the world, those are shocking statistics. Anyway, let me lob my idea in and see what you think. So we've been talking to the energy companies about what might make a difference this winter. And one of the really shocking things, I think, about the current state of affairs is that the energy companies can force people onto prepayment meters, which are much more expensive than is covered by what the government calls a cap, which isn't really a cap, as we all know. And so it seems to me that at least temporarily, perhaps for the winter, the companies ought to not be able to force people onto a prepayment meter. The fact that they haven't been able to pay, you know, in times gone by, you might have said there were kind of won't pays or whatever. There will be many, many families this winter who simply cannot afford that, and therefore forcing them into a system where they're having to prepay for their energy just doesn't seem right to me. Thank you.
Thank you very much. We'll take a question at the front, and then we'll take those two together, please.
Thank you. Yeah, my name's Jordan. Should I stand up? Or I don't know.
So you can sit or stand, whatever's comfortable.
Sorry, I'm on my trade union. I'm the Labour Link officer, which is the community and voluntary branch in London. We've just launched a campaign recently, which is to abolish DBS charges for workers. I actually do a Saturday job as a support worker, and I had to pay for my DBS check, and that was £40, which is basically the charity's getting 4 hours of free labour. It's basically, and also it's an extra tax on people who do choose to work in sectors like social care, which we already have a massive shortage of people. Bankers get a golden handshake. I'd say this is we give social workers a slap in the, a slap basically, a golden slap or whatever you want to call it, but like, yeah, bronze slap, yeah. But yeah, I just like to see kind of the Labour Party kind of like abolish this kind of practice, because I think it's pretty kind of punitive on people who do choose to work in the social care sector. Thank you.
Thank you very much. And DBS checks being disclosure and borrowing service for anyone not used to acronyms. We'll come to the panel on those two questions. Might start with you, Emma.
Yeah, thanks, Joanna, and please do, and look forward to reading your report. Please do agree with what we were saying, and I think most of us understand the horrific impact money worries have on people's mental health. And when you look at sort of the data from the Samaritans and other charities, and you see how money worries and concerns is impacting mental health, it's incredibly sobering. And I actually wished, I don't have it to hand, but I looked up the data actually on how many, I'll have to find it and tweet it later, on how many people have been forced onto prepayment meters in the past 6 months, because I was looking up on this. And it is awful. And the thing with the prepayment meters, which I know you understand, but to make it even worse, is obviously you're going to use more heating in the winter. So if you're a direct debit payment customer like I am, they work out my cost and they divide it by 12 and they say you pay the same amount every month. And of course you're getting credit in summer in theory, and then you go into debit in the winter. But a prepayment meter customer has got to find all that additional money. And I've had people contact me, my office, in tears about this, saying that they've just put £5 on and half of it's gone on the standing charge. And that's something else I'd love to look at, is the standing charges and how unfair the standing charges is, because it's an additional tax on energy as well. So I think that's a really good idea to sort of throw at us at the moment as to look at. So thank you for putting that forward. And agree with you, Jordan. When I was a teacher, I had my DBS paid for, so I didn't even, thanks for bringing that to my attention. I didn't know that other people didn't, because we just did when I was working with kids. So that seems a fair point as well.
John,
I mean, I think Emma's probably responded well to the first question, and obviously it's, I'm not the Shadow Cabinet member responsible for that anyway. And on the DBS, I mean, neither am I now no longer the Shadow Health and Social Care Secretary. I was for a long time, the longest in Labour history, actually, according to Wikipedia at least. But I'm just shocked at what I've heard there, and I think, in a sector where we are desperate for workers, to be forcing potential workers to pay that just seems to be, I just think it's staggering. So that is something that I will definitely take up and pass on to both Angela Rayner, who is leading on our workplace rights agenda, but also West Streeting as well for the specific sector.
Thanks very much. Other questions? I think we've got one at the front here, and then one just behind, and one at the back. So maybe we'll take an ambitious 3.
Thank you. I'm Gail Barton. I'm a councillor in Burnley, and we know all about poverty in Burnley. Just before I get onto my point, can I just throw something else out there? I'm also a link safeguarding governor for a secondary school, and last Friday I sat in a meeting where we were discussing whether we need to change our DBS checks to every 5 years and just get people to sign a declaration, because the impact on school budgets of having so many staff and us having to pay these charges is actually not something that we can prioritise when you think about all the other challenges that we are up against. Anyway, back to my original point. So in Burnley, what we actually have is a combination of unskilled, low-paid work, which leads to lower lifetime incomes, which again is a poverty premium, combined with very poor housing stock, where, first of all, we've got the impact on health outcomes, which means that people are having to spend more time off work being sick, and therefore that's a poverty premium. Plus, because we have such damp issues and other, property issues, you've got to have your heating on even more. So it's incurring higher energy bills as well. So it's just whammy after whammy after whammy that we are dealing with. And the food quality, people on lower incomes tend to buy poorer quality food. They're not getting the nutritional out that they need. And so, again, that's going to impact health, and therefore so I suppose my question ultimately is, when it's layered to such an extent, the calculation, how do you even begin to calculate it? Because, your health, it's not something you can buy, is it? If you develop cancer, you can't just buy your way out of a situation like that. You can sort of have extra money given to you, but it's not always going to make the difference.
Yeah.
Thank you. We'll go to the gentleman behind you.
Hi, my name's Kylo. I'm a fellow of the Institute and Faculty of Actuaries. I'm actually a pension consultant. I work at Deloitte. So I guess my question was about, maybe it's a bit too technical, so apologies if it is, but obviously while markets are amoral and they're sort of not considering what's right in how they price products, obviously there's a reason they do it that way, right? So if you create a situation where you're asking for a cross-subsidy for wealthier people buying a product to subsidize the cost of poorer people buying that product, then if one institution were to do that, you would have a situation where wealthy people would be incentivized to buy products from another institution because they'd be cheaper, and poorer people would be incentivized to buy one from the institution that's offering the cross-subsidy. And so that institution loses its more profitable business and gains less profitable business. And obviously, what happens when companies do that is that they get out-competed and they fail, right? So for us to achieve that kind of end, and it's a shame that Martin isn't really here to answer the question, I guess, but I wonder, I guess the point I'm making is that you need to be able to get all of the providers of these kind of products to move at the same time. That's one question. The second question is, even if you can do that, how do you prevent a circumstance where instead of making products cheaper for people in poverty, they just make products more expensive for everyone?
Thank you. We'll take one at the back.
Thank you very much. Yeah, my name is Matthew Patton. I work for the Centre for Social Justice. Just a pre-point, some of your comments about universal credit, Jonathan, we were one of the architects of that. We would agree with, actually, and it would be interesting to have a conversation with you about that separately, because I think we might be able to help you address some of those. That's one side. I wanted to pick up really, I thought, on the point that you made, Emma, which was really about credit unions. I totally agree. I think it seems it's immoral, really, that those who are least able to afford something have to pay the most. And that is a real fundamental weakness that we have in society in terms of the area we're talking about today. And it seems to me that one of the areas to look at is around the area of risk and regulation. And I do think we have a fundamental problem in terms of how we think about risk in this country. It's interesting to have an actuary on the panel to talk about that. And a lot of this is just about money. And in the bank, we have one of the strongest and most powerful banking systems in the world in the UK, with balance sheets to die for, frankly. And yet our banking system, like our regulator, the IFA, leaves millions of people to fend for themselves in the unregulated markets. We've just done some research. There's over 1 million people are resorting to loan sharks because they can't get the credit to meet what are often short-term things. You know, buying a car, affording a season ticket, you know, a big birthday coming along, something that's broken down in your home, are challenges that we all have to face, and most of us have an access to credit to be able to afford those. But our regulators and our banking system leave many people on the poorest situations to fend for themselves. And it seems to me that we do have a set of organizations whose principles are about helping those often in the most poorest circumstances, and those are credit unions, who, unlike the banking sector, who have had 30 years of a loud revolution, they sell insurance products, they do all sorts of things, they've had a big bang. The credit unions are still pretty much operating on legislation based on 1975. And I think there's a big piece of work for government which would look at credit unions and allow them to expand and develop products, because they have an ethos and a culture which is about doing a lot of the heavy lifting and addressing some of the risk issues that the rest of the sector have ignored.
Thank you very much. So we've had a question about layered poverty premiums, about market dynamics and responding to, and how insurance products might respond, and a question about credit unions as well. Who would like to come in on any of those?
Yeah, I think it's a good point about the cross-subsidy. I think that what we were talking about can only work if you enforce the industry to do it as a whole. The examples we gave about were flood re. But I think the other thing is, you know, like a lot of these subjects that we talk about, it's all wrapped up and it's all layered. So, you know, trying to reduce insurance premiums for the poorest in society is only going to, I say only, is going to obviously have an immediate financial impact, but what do we do about the areas that people live in? So I think there's, you know, if we try and address some of the underlying issues, I think some of these other things will settle themselves out, but I also think as an industry we have to think creatively as well. So for example, I don't know if any of you have a car tracker fitted. I think there's some insurance companies that will fit a tracking device to your car. So there's an incentive on the insurance company to do that, because they will be able to reduce the level of risk, but also charge you a more accurate premium. So how about, for example, thinking creatively, you know, making some of these areas that people live where your car is more likely to get stolen or your house is more likely to get, broken into, how about making them safer? You know, incentivizing insurance companies to provide burglar alarms, for example, for the people who are less well off in society. That might help alleviate their premiums. That might help reduce their levels of risk. So I think it's kind of twofold. You have to address the thing directly and head on, as we've given flood re as an example, but it's also thinking creatively as well. What can we do as an industry to help those in the society as well? So I think that's just some thoughts on that point.
Thank you. Emma?
Yeah, thanks for that, because I think how do we basically ensure everybody has access to financial services is the big question that we're trying to look at. And I think the points, I mean, flood re is a really good example. I've been looking in more detail at the social tariff and how that works for broadband, and why broadband companies would want to offer the social tariff when it's slightly loss leading. And when I was talking to my local broadband provider who provides the social tariff, they were saying, well, people come in and out of it. So there are times when people become, if you like, profitable, and times when they become unprofitable as customers, because you come in and out of the social tariff rather than you are permanently within it. And I thought that was really interesting, though I do recognise it doesn't work in quite the same way for energy. So I haven't got all of the answers for you at the moment. But in terms of reducing risk, one of the other things I've been looking at, and this comes back to this cross-departmental working, it actually comes under the Department for Levelling Up, which is all the flood protection and flood insurance, and how do we change the planning system to make homes more flood-proof, which means you would therefore be offered lower flood insurance. And I was talking to the ABI about this and saying to them, well, what's the incentive for you to put flood doors in your property or for you to flood-proof your home? Where's the incentive for it in terms of your premiums? There's a big incentive for you to put window locks on or for you to improve your home security or add burglar alarms, but what is there for you to flood-proof it? And what ABI's pushback to me was that you'd need some certification process then to recognise that you're doing something to a certain standard for it to be reflected in the premiums. And this goes back to what we said right at the beginning, and you end up going around in circles of saying, well, okay, to try and address affordable flood insurance for everyone whose homes was built post-2009 and therefore not applicable to flood re, you've got to look at flood mitigation and protection, which actually comes in planning, which is the Department for Levelling Up, and doesn't come under the Treasury, and doesn't even come under the DWP, but it is actually still part of the poverty premium. And you end up then again, as I said, going around in circles. If we want to address this and really get into the technical aspects that you were questioning on, we need the experts in the room, but they need to be mandated to come up with solutions, and they need to feel the pressure, I think, from governments and the leadership that a solution needs to be found, rather than it being acceptable for it to continue in the way that it is. So I think that's what I'd like to see, that level of leadership from the Labour Party in looking at. And the role of credit unions, I think there's an opportunity with the Financial Conduct and Markets Bill at the moment. It's talking about an increased role for credit unions and hopefully trying to change some of that legislation. And again, but we're not in government yet, and therefore it's a lot depending on sort of convincing the government at the moment that this is an important priority. But I would argue, and I would like to assume most people in this room would argue, that it is. But I think if we really want to change these things, then we need to be looking at having John as not our shadow secretary, but our Secretary of State, and Rachel not as our shadow chancellor, but our chancellor, to address some of these difficulties long term.
Thank you very much.
Just a final, very brief couple of points. I'm very keen to meet with the Centre for Social Justice to talk about how we can deal with some of these issues in the current design of the system, which I do think land people with the most impossible debts and problems, and there must be a way of dealing with it. We were told that millions have been spent on a very fancy whiz-bang computer to deliver universal credit, yet there are still these systems, problems in the system, and as well as ones around making people wait and so on. And it's, Frank Field, I mean, it's not very well these days, but I mean, Frank Field would tell a story that in the old days, and I'm sure it didn't work for everybody, in the old days you would fill in a form, and the form would get sent to Blackpool to be processed, and you'd get your benefits within sort of week and a half or so. And now it's all computerised, yet you're left waiting for ages and ages, and people seem to be at times worse off than what it was in the past. So I'm very happy to meet at some point. And just a final point for a friend from Burnley here, and I hope we get a Labour MP back in Burnley, of course. Look, I'm really pleased you raised this link between poverty and health, because this is actually really my passion, and it was my big passion when I was in the health brief for so long. And it's sometimes, because even though we all say we shouldn't think in silos, we do the sort of health fringe events and the poverty related fringe events sometimes don't interact with one another perhaps as much as they should do, if I can put it like that. Look, poverty makes you ill, and illness traps you in poverty, right? And look what's happening now. We've got people forced out of the labour market because of ill health. And those forced out of the labour market because of ill health at the moment is rising at its fastest rate ever. And it's the highest level for 20 years. Right? So what is going on? Why are so many people becoming sick and unable to work? Some of it could well be long COVID, although the actual definition of long COVID is slightly contested in the medical world. Anecdotally, we're told there's a growing burden of mental ill health driving people out of work. I suspect there's probably people in their 50s, because we've seen a big move of 600,000 over 50s have left the labour market. Probably people in their 50s who are waiting for hip operations, knee operations, simply cannot get it, and the NHS, which is forcing people out of work. Now, the point I'm making is that the cost of living crisis will become an issue for many of them if they're forced out of work, but some of them, those people are being forced out of work because of the socio-economic circumstances in which they live has made them ill and sick, and they cannot work, yeah? And we know, also, you take it to the other end of the spectrum, we know, like, a child born right now, this second, in Liverpool, in Burnley, in Leicester, that child born right now, this second, as we're talking, if they're born into poverty, as they grow up, more likely to need, statistically, more likely to need to turn to mental health services as a teenager, less likely, probably, to get the relevant immunisations that they need as a baby, more likely to be admitted to hospital throughout their childhood for dental problems, more likely to have their speech and language impacted because of poor oral hygiene. If that baby born right now in poverty is very, very, very poorly because their mother is not well because of the circumstances, socio-economic circumstances, that baby is less likely to survive if they're very, very poorly when born. So poverty impacts on health outcomes, and it actually impacts on life expectancy. In fact, you know, Michael Marmot has done analyses which shows it's stalling indeed for some of the very poorest women in the northeast has begun to go backwards. So poverty is literally a matter of life and death. So it's right that we want to tackle poverty through, you know, the DWP and through dealing with some of the regulatory issues that we've spoken about. But poverty, you know, we will have a more productive, healthier and happier society if we tackle poverty as well.
Yep. Thank you very much. So that brings us to the end of our conversation. The only thing I'd add to that final point is that our Commission on Health and Prosperity, IPPR, is looking at exactly those links between health and low income, what that can look like, and also how you can improve both, how investing in health can lead to more broadly shared prosperity over the longer term. Thank you all so much for your time. Thank you to our fantastic panel. Thank you to the IFOA for being sponsors for today, and enjoy the rest of your afternoons. Thanks very much.